and welcome to the InsurAce Insurance channel. Dan very kindly has put together this nice little fireside chat between InsurAce and Bright Union. Dan, if you want to just give everyone a quick introduction to InsurAce and what you guys do.
Yep. Hi, I'm Dan Thomson, the Director of Business Development and Marketing for InsurAce. I've said it to the guys already, but I have to apologize for a little bit of background noise. I'm literally outside of the Solana Breakpoint conference today. InsurAce is a DeFi insurance protocol built on Ethereum, Binance, Smart Chain, Polygon, and Avalanche, secure against smart contract hacks, bugs, and other insurance events like IDO insurance and stablecoin DPEGs.
Awesome. Kiril.
Yeah, hi. My name is Kiril Ivanov. I'm a founder of Bright Union. Bright Union is basically, technically, is their aggregator of DeFi insurance protocols. So what we offer is the best price, best deal, best offer on the market, connecting the multiple underlying risk protocols.
Really interesting. So sort of like a 1 inch for decentralized insurance.
Yeah,
and Stephen, you work for Bright Union as well. What do you do at Bright Union?
Yes, thanks for having us. I'm Steven, I'm product lead at Bright Union, and I'm currently working on making it very easy for any DeFi developer to start offering insurance inside of their app.
That's really cool. So my name is Ridyard. I'm the CEO of Radix DLT. Radix DLT is a public ledger layer 1 protocol dedicated to decentralized finance, specifically to bringing decentralized finance into the mainstream. One of the key things that we also concentrate on is increasing the security of the applications that you built on top of these public ledgers by focusing on sort of a bit lower down the stack, namely the programming language that you build in and the execution environment to try and help reduce the kind of hacks that we're seeing, the exploits that we're seeing, which I think would be a really good place to start. Is just like, let's talk a little bit about that kind of the reasons that you guys started your companies and like what was the problem that you saw in the space. Dan, like if you want to start off, what was InsurAce's sort of like main purpose?
I'm going to have to pass this first one over to the other guys first because a very loud Harley's just rocked up next to me, and I'll wait till he's passed on.
Cool. All right, Kiril.
Yeah, sure. Yeah, well, so I'm a techie, right? So I'm building on blockchain for last 6 years, but also I have a background in insurance and insurtech in general. And I think the DeFi insurance is something which actually groundbreaking because it can connect the vibe of community to so traditional and the boring business like insurance. So putting them two together, basically, and enabling the conceptually different business models. It's mind-blowing, because we know DeFi is, just one sentence basically tries to, replicate the business model, right, as we know that for ages. And here we are basically trying to do the same, but for insurance business, which is traditionally profitable, there's huge middleman in between. And here we are trying to make it really, really working totally different. And it's super cool.
I'm going to ask a really stupid question, right? Because I think that like one of the narratives of blockchain, of public ledgers, of decentralized finance, of all of this is, well, we have smart contracts, so we don't have to trust an intermediary. We don't have to trust someone who might run away with our money. We can just trust the blockchain. We can just trust the smart contracts to look after our money and make sure that everything executes correctly. So why do we need insurance in this space?
Okay, I'll jump in there. That's exactly the reason we actually got started, is to address the insurance market as a whole, as a wider industry. There's a lot of inefficiencies, a lot of things that can be improved using blockchain, but specifically for people locking their crypto assets into DeFi protocols and into decentralized finance, which is addressing the finance industry. These assets are being staked into different protocols, as we know. And even though, yes, they're being locked into smart contracts, it's not necessarily the smart contracts themselves that have issues. Sometimes they do, and sometimes those smart contracts will get hacked. It's also the auxiliary services that are attached to the smart contracts and the protocols that also have some weaknesses. Any sort of transfer and weak point within a protocol, within a smart contract, or interaction with another smart contract, bridge or lending protocol, or any time there's a movement of any money, these are where the exploits are most commonly found. And even with the best smart contracts, the best developers, the best teams, with the best audits, bug bounties, the full works, unfortunately, we're seeing day in, day out, week on week, that these hacks are still happening, and insurance is the only real way of mitigating that risk when investing in DeFi.
Yeah.
Okay, so like what you're saying is if I'm investing in DeFi, if I'm putting my money on DeFi, I should be buying insurance for anything, for everything. Like, is there anything that I can be like, how should I think about insurance in DeFi? If I'm using DeFi, what's important?
So it's a case of if you're just holding your crypto on in a wallet and you've got your basic tokens, that's one thing. If you're then using those tokens and lending them to a platform to be used as a utility or used in some sort of financial vehicle or function, it's a case of there is a risk in doing that the protocol might get hacked and your funds taken away without your permission or sent to a hacker's wallet. So by having the insurance, yes, it's a smart investor choice to add insurance into any purchase. Now, we all know DeFi can get you yields of 10% up to 20, 30, 40, 50%. I mean, you can look at some of these DeFi 2.0 protocols giving a few 1,000% APY in theory. So for the small cost of a couple of percentage points, to make sure that that's safe against any hacks or bugs, that's where the insurance protocols really have their value.
Yeah.
Okay. All right. So go on, Kiril.
Right. So what's interesting to notice is that now DeFi grew from a 10 billion to 100 billion business, and now more professional institutional parties are coming in. And always their first question is there insurance? Where can we get insurance? And so we started with the early adopters, which came in experimenting, making huge APIs. And now everybody made their profit and wants to secure it a little bit, because nobody wants to be among the thousands of users which have lost their tokens in the last year, because over 1 billion has been lost already for hacks.
Right. Yeah, I mean, something that we talk about a lot, and I think that the industry is going to be less and less willing for that to be like in the early stages of an industry. Mistakes happen. As it matures, for us to actually be able to have a shot at bringing the mainstream into crypto, into DeFi. It's got to be perceived as safe. Like, it has to be perceived as somewhere that you're not risking your life savings by just putting it in here. Right now, it does feel like that. I think that if it's $1 billion of hacks and $100 billion under management, that's 1%. That's 1% of assets that get lost, which is kind of insane. So like Bright Union as like the 1 inch for insurance, that means that there must be that means there must be a few places that you can buy insurance for. Is this what you're seeing? Are you seeing this as a maturing market, or do you think that there's a long way to go before we have like a really great insurance marketplace for decentralized insurance?
Yeah, so currently I would say that the market is new. We are learning, and you see that some companies are being very innovative. If you look at InsurAce, they've been doubling their sales revenue every 2 months, which is amazing, and they need to keep building new products. Because now you can buy insurance, but the customers say this is not enough. I want automatically my insurance to scale with my investments. Why do I need to tell you now for how long I need to buy my insurance? I want, if I have it, it's insured. If I sell it, I don't want to pay for the insurance. And these kinds of innovation will change the market.
That's really interesting. So what happens? Like, let's talk about a recent example, right? So C.R.E.A.M got hacked. I'd be really interested if someone could give me the details of how that happened, just to start off with.
I mean, I think Kiril's probably the most technically minded here, but I'll happily take it if not.
It's quite classic. I mean, it's not super easy, but it's typically flash loans are involved, and a little bit of, if there is an automated market making in between, then you manipulate with the price of an asset, take the loan, pay it, swap it, pay it out, etc. There are a few similarities out there, and although they are still brilliant. I mean, well, if you look at that, it's just great. I can say that.
Sure. So what actually happened, and how much was lost?
I think it was 130 million in the C.R.E.A.M hack. $130 million got hacked, and then I think someone else lost another 100 million the week after. It literally is turning into about 100 million on average a week at the moment, which is it's unacceptable, really. I mean, the space is growing, and you're right. I mean, it's at the moment it's still so young. There's so much money there that people just are taking that risk on themselves, but that will stop soon. As the institutions do come in, they start looking at these things with the chances and the percentages they're making, and the small costs to actually cover their assets while they're there. I think it's it's a cost people will more and more be willing to take. And as Stephen says, as the industry develops, as the infrastructure improves as well. So by the time we get launched on Radix, for example, hopefully there'll be this. What we're aiming for is one-click and zero-click integrations. Now, one-click integration is essentially where you can opt in like a travel insurance, right? Where you buy travel insurance for a flight, and so we try and do the same thing with DeFi staking, right? So a quick opt-in when you stake. Zero-click would be where a protocol works directly with us, and instead of offering, say, the full 40% return, they offer, say, 37% return, and that 3% difference automatically goes to the insurance protocol, so your staking with that protocol is automatically covered. And then that's when this entire industry becomes safer, and it's all done automatically on chain, and people just genuinely don't even have to think about it, and they're covered.
So with something like C.R.E.A.M that's $130 million as a result of an exploit, how does this change? Do you guys see a spike in business as soon as that happens?
It's interesting. First thing, I think for our side, from the first thing is that we have a minor heart attack and just to remind ourselves whether it's one of the 80 protocols we cover. That's always the first thing. I mean, we don't oversell our insurance, so it wouldn't be an issue. And actually, there is an argument saying that with a few payouts, it actually is a proof of work for the industry, right?
Yep.
But yeah, I mean, people who especially are victim of hacks, they are far more likely afterwards to recommend insurance and buy insurance straight away.
Right.
I think in terms of DeFi insurance, I think we are it's baby steps. If you just compare it to the smallest traditional insurance company and the biggest in DeFi insurance, it's just nothing. The market currently or DeFi insurance is so tiny. I mean, we are just really, it's baby steps. I think we are like similar to maybe Maker back then for DeFi, right? So we're just exploring the industry and but it will come. Maybe a new product will arise. I mean, we're talking about DeFi insurance currently, but there is so much more to explore. There is a life insurance. There is a P&L insurance. I mean, the travel insurance is huge, et cetera. So, yeah. I
mean, the insurance I'm really excited about is actually a replacement for FDIC insurance, or for DeFi to cross into the mainstream. DeFi has to be a legitimate choice for consumers to be choosing to put their deposits, their savings, into products that are sort of built on top of a decentralized application, or a decentralized financial application. And for us to get there, I think there needs to be a viable alternative to FDIC, that when I put some money into, and we're close-ish, right? Like, so, via InsurAce or via Bright Union, I can buy insurance on a position. I can say, okay, I'm gonna lend on Aave, and as a result, I'm gonna get 2%, 3% per year, 5% per year, 10% per year, depending on what tokens I have, depending on what the market is. And that's already competitive and interesting versus depositing in your bank account and getting 0.5% or less, or paying for the privilege of keeping your money in a bank, as it sometimes is in some countries. So I think that the government level like guarantees that are given in finance, those are the things that I think are really going to start, like long term, that are really going to start to move things. But it's also like, how are we going to message that to consumers? How do we get to the point where you can say to a consumer, don't worry, like if you put your money here, it is equally as safe, if not better, than putting it in a bank? What would be your pitch for that? Yeah,
that's the goal we're working towards together, Piers. Hey, you're working towards the same goal with your programming language and your infrastructure, and we attack the same problem from another angle, where we're saying is like, yeah, the developers are moving quick. They do that to be innovative, and what we will do, yeah, if they were too quick, then we give you your money back. And I think many institutional people think it's a great deal. For 2.5%, you can just sleep well at night and not worry that your money is gone tomorrow.
Right. Is that where you're seeing most of your demand?
I guess it's difficult to say. I mean, we don't KYC, so it's hard to know exactly. But we do see a lot of a lot of new funds coming into the space, a lot of new funds speaking to us and asking how it works. So a lot of more institutions are coming in, but on a more private fund level. The bigger institutions who have asset managers and people who are responsible for other clients' money, they are a lot more hesitant right now because they're waiting for more other traditional finance products to move to DeFi, like E&O insurance. We get asked about quite a lot, so errors and omissions. So that basically saves the asset manager the culpability if there is a problem with the allocation of funds, which is what they're most worried about.
Mm.
And Stephen, you've been saying a lot about sort of like institutions waiting on the sidelines, looking at buying sort of into DeFi, and one of the things that's holding them back is insurance. Was that something that started you on the path, as in like you guys had been speaking with institutions for a while and realized that this was a big unsolved problem, or is this just something that you've started to experience as a result of spending time sort of building these products?
Yeah, we now mostly feel it because we're exploring every option, looking for the product market fit, do we want to be in the wallets with the institution, with retail? But the market is moving in every direction. Both InsurAce and Bright Union have introduced multi-chain a few, I would say, weeks ago. Mm-hmm. And then the low amount covers of maybe $60 started skyrocketing. So that's also like the little man who's buying a cover for $2,000, mm-hmm. and when you would buy your cover on Ethereum, then it would already cost you $100 in gas. So that market didn't exist, and now it does.
Right. I think that's so important. Like, obviously, the gas prices in Ethereum is artificially skewing the market because you have to, because of just the cost of using the network means that you tend to get larger ticket items, on top of these networks. One of the big things that Radix has been focusing on for a very long time has been the scalability problem. But we do see it as being sort of like, I do see insurance as being this key enabling technology, and I think there's a few ways that it's happening. The first is that the competition that's happening on top of these public ledgers for insurance products and for financial services is meaning that innovation is able to move a lot faster. This idea you were saying about how developers can build, and if they move too fast, then we'll pay you out. That's adding more security and certainty to the market. But I also see it as like the next stage in maturity. Like Kiril was talking about the idea of like life insurance products, and I think that's like the ultimate end state for this, right? Because what we have here is a public ledger, like Radix, like Ethereum, like any of these others, a public ledger that can have the opportunity to be more trustworthy than an institution, more trustworthy than a government, and you can put money safely in there for an entire lifetime. And so I think life insurance is one of the biggest insurance industries in the world, right? And so, like, how soon do you think it is that we are going to be able to buy true life insurance on top of using your protocols?
Yeah. Well, it's always. Go ahead, Dan.
Sure. We get asked it a lot, right? But then the thing about DeFi and blockchain is it's on chain, right? It's a lot more objective than the subjective nature of, not life insurance is a bad example, but other forms of insurance which are fairly subjective. We are working on a few solutions to this problem. We're speaking with like Claros.io, who's an independent DAO as a juror. on top of, because at the moment for our sort of claims process, we use our own, our own token holders as to stake, and then they make the votes. But obviously there might be some bias. There shouldn't be, but there might be. So as a secondary check, we are working with different DAOs as an option to, as a secondary vote. And that's the sort of like double check and double sort of vote that allows for us to move into the more subjective realm, because then you actually essentially have a jury of peers independently checking and voting on these things, which can open up to more subjective insurance types.
Yeah. And hopefully, it's quite easy actually for life insurance, because the resolution is quite binary, even more binary than DeFi hacks. I mean, it's
right. Is this person dead? I mean, like, you still have you do still have a relatively complicated process of proving someone's dead, right? But like, you're right. It is more, but it's difficult to prove a negative. Is this person dead? Like, you have to have like the death certificate.
Technically, I mean, it's all there in every country. We explored the space a little bit also ourselves, and pretty much in every country there is a centralized registry which keeps the records about this. So technically it can be quite I think it will be too early before it's like too late, because at one stage it just kicks in like that. Once the capital is there, once the return on the business is there, and then it's just global, it will be so bloody huge. I mean, we just went out with this SDK, right, which gives access to these underlying risk protocols. But if you think about this, it's like global by design. I mean, it's just 3 lines of code which gives access to the global DeFi insurance space. Imagine it as IT. I'm just thinking that you could never achieve that in the past. You always have to this API. You have to integrate with specific company in specific country. It's Allianz Law, it's AXA, whatever. I mean, and in here you just have access to first the capital. So both sides of the business, right? You can buy, but you also can provide the capital. And it will move slow, unless at one stage it just go really, really quickly.
Yeah, I think that is ultimately the beauty of decentralized finance, right? Is this ability for you to have multiple competing projects all on the same infrastructure or several of the same infrastructures, and now capital can just move instantaneously between them. And if you look at the secondary insurance markets, so the reinsurance markets and insurance like Lloyd's, they are in some ways a decentralized marketplace. It's just a permissioned one. Like, you have to be a really big institution with a really large amount of capital, and then you do all the trading via lawyers. And then suddenly you have this ability to, once we're creating the end user product, i.e. the actual risk that you're writing, and that's an on-ledger written risk, and it has its capital allocation, suddenly you now have a product that's ready for secondary market, for securitization, for retrading, all of that kind of stuff. And I think I agree. Like, I think the space is going to so go slowly for a long time, and suddenly it's just going to go, because all of the stuff is going to be in place for that to happen. So I'm super bullish on insurance. I really, really appreciate your time, guys. It's been such a pleasure talking with you all. Does anyone have anything like final they'd like to say? Any last thoughts? I'll start with Dan.
Yeah, I completely agree. It's a hugely undervalued industry. There's a lot of people working on solutions here. I think it's not about competition. It's a lot of collaboration now, and there's a large enough addressable market that we're all focused on, and everyone's building and working towards it in slightly different ways. But it's a good thing. If everyone's doing the same thing, I don't think we'd get very far. But it's just about growing, building, and yeah, it's amazing to see. And then having people like Bright Union come along is really helpful for us, because it's an extra vehicle to help introduce what we do to the wider market.
Kiril? Yeah, well, just as Dan said, yeah, exactly. So I mean, yeah, we just lack a little bit of few bits and pieces here and there. Of course, infrastructure, but then Radix is going to be here, and so for us to integrate. I mean, and it's just, yeah, lots of fun ahead. I mean.
It's going to be an interesting couple of years, an interesting 4 years. It's going to be super exciting. Gentlemen, thank you so much for your time. And Dan, thank you for inviting me along to host. I really appreciate it. And look forward to seeing all of your projects do incredibly well in the next 12 months.
Thank you.